Hello everyone. It is Sunday, January 23rd, and this is episode 47 of Odds Are, your S&P 500 weekly market forecast. All right, let's jump right into this because there is a lot going on and a lot we have to cover. So we're going to jump right into what happened last week. I mean, looking at this, not a green bar in sight, nothing but red. I would call this a roller coaster ride, but typically roller coaster rides go up and down, and this was just all down. Now, last week, I did call. I said 45.78 was the breach point that I thought we were going to be hitting. I thought we were going to go down and breach that, and we definitely breached 45.78. It was the first time in months that I said that the Parabolic SAR was within the realm of probability. I said, do not be surprised if we close below that Parabolic SAR. It is outside of the lower settlement range, but it is very close and very possible. And that definitely happened as well. Looking at that blue line across the bottom there, that's where we closed. We closed outside of the Bollinger Band, outside of every other price point here, but we did breach that lower breach point, and we did close below that Parabolic SAR, which we are going to cover here shortly because that comes with its own set of implications. All right, but before we do that, let's take a look at the moving averages. Moving averages, bearish on the short term. Hopefully nobody watching this is surprised about that. What is slightly surprising is that the medium-term moving averages are still bullish. Now, that's because medium-term moving averages is basically looking at the relationship between the short-term moving average versus the long-term moving average. And we are not yet, in the grand scheme of things, gone down enough to flip that. I think if we have another week or two, even close to what we just had last week, we will definitely flip this to at least neutral. But as of right now, still medium term and long term holding on the bullish. All right, let's take a look at what we're expecting for next week. So this whole slide here looks like it's been flipped on its head, and that's because it really has been. So I'll actually start with the far right. Let's look at that 4808. That's the new Parabolic SAR, and that's because we have now flipped to where the Parabolic SAR is above the market instead of below, because we're now in a Parabolic SAR down mode. And so the Parabolic SAR trails the market now from the top side going down. And that's a big change from last week, which again we will get into. But looking at the rest of the stuff, we do have an offset. We've seen these before where it doesn't fit, the breach points don't fit nicely within the expected settlement range. In this case, your upper breach point is 45.77, lower breach point is 42.87, but look at your settlement range. We're expecting to settle between 42.69 and 45.10. What I will point out here, bring your attention to, is that the settlement range normally is around a 79 point something percent, odds of settling between that. In this case, it's adjusted to 83.9, so almost 84%. That's because in a situation where the Parabolic SAR gets crossed over, where we close below it or above it, then this number actually takes precedence. And in this case, we have a higher probability that we're going to close within this given range because we're in a week after a crossover. All right, let's wrap this into the relative view. Here we go. So you can see now that yellow bar at the top, the Parabolic SAR is now at the top of the market, and we see where our settlement range is and breach points. Now, looking at this, I do think that we're going to have to eventually kind of get back into the Bollinger Band range. That doesn't mean the Bollinger Band range is going to reach all the way down there and catch up to us. It could end up being a compromise. So we could end up going up a little bit, not necessarily to where the Bollinger Band is, but the Bollinger Band is going to be expanding to the downside to kind of catch up to the price action. So somewhere in between there, we're going to reach that compromise, if you will. All right, and now let's take a look at, didn't see that one coming. Okay. Last week, I really tried to emphasize, hey guys, please, please, please watch this Parabolic SAR. It is now a very real thing. It's a very real possibility. Do not discount this. Do not discount this. Well, I hope you didn't, because it happened. We closed below the Parabolic SAR, and now we have flipped everything on its head, and we're going to take a look now at what that actually means historically. All right, so the top chart is the average change in weeks where there's a flip between parabolic up or down. The blue tiny little bar in the middle, that's every week, every given week. So on average change is like 0.04 to the positive side. So a bullish bias there, if you will. Now, the green bar is what we see as the average change when we flip from parabolic down to up. But that's not what happened this week. It was the opposite. we flipped from parabolic up to down, which is that red bar. And that red bar says that on the average change in a week following that crossover is negative 0.32%. So a negative average. Now, you could say, well, sometimes we might have a really, really bad week and that brings the average down. Well, let's take a look at the median average. The median change. The median change is actually lower than the average change. So what does that tell us? That tells us that there are some higher numbers, higher occurrences that are pulling that average actually up. Because we all know from grade school that the median is like that point where 50% of the numbers or values are above it and 50% are below it. So in this case, 50% of the numbers that occurred or the change in weeks when we traded below the Parabolic SAR, it was actually negative 0.77%. So 50% were below that. Well, we know that we have this bearish tone going into the week, but what does this actually tell us? We need to be prepared for more red. We need to be prepared for that. Again, don't get caught off guard because the numbers don't lie. This is a tendency. This is something the market tends to do. You need to be prepared for it. Is it going to happen exactly that way? No. Could we have a sharp V up? Absolutely. We've seen that time and time again. But what I think is going to happen is we're going to actually kind of stall, right? Because in situations like this, you can have three things. The market can continue in a free fall. The market can take a sharp V up, or it can take a pause. It can basically take its breath, give a chance for the sellers or the short, the short sellers to take some profit off the table. That'll kind of stop the bleeding for a little bit. You get some people that are going to inevitably come in and start trying to buy because they see it as a buying opportunity. That also stops the bleeding a little bit, and then the market has to decide who's right. Are the people that are taking profits just going to get an opportunity to wait for like a dead cat bounce and then go back in and then sell the market more? Or are we just going to then bounce back up because this becomes a buying opportunity? That is yet to be seen, but do not ignore these negative tendencies in the week following a parabolic down crossover. All right. I'm going to stop. I'm going to get off my soapbox here and go right into the quote of the week, which is by Mr. Shelby Cullum Davis, who is an American businessman and investor and philanthropist. And Mr. Davis says, "You make most of your money in a bear market. You just don't realize it at the time." Now, this obviously, if you're a long-term investor, you're buying the dips, you're buying things because you're doing dollar cost averaging. You think that eventually the market's going to be going up over time. That's great. But I look at this quote and I see something else. I see the fact is that people don't realize it at the time. And I think that's really important because there are a lot of opportunities that present themselves that we just don't realize it at the time. And it doesn't just have to be a bear market. It doesn't have to be a particular swing. It could be a lot of things. It could be a spike in volatility could present an opportunity for people to sell options and then capture that premium. That's an opportunity. And sometimes we just don't realize it. So I take this quote and it reminds me to remain vigilant for opportunities, for situations that have setups that are statistically indicative of an edge, that the odds are in your favor. That's what the show is all about, right? Looking at what the odds tell us and hopefully being able to put on a trade that takes advantage of those odds. So hopefully you guys are doing that in your own trading. If not, hopefully this show then could give you some advice and give you some ideas at least around what to expect in the week to come. I personally, I'm curious to see what happens next week. I know I have my own thoughts and ideas, but we'll see what happens, right? Well, I will see you guys here next Sunday to discuss that and more. Until then, have a wonderful week, and I will see you guys next Sunday.